Hello, everyone. Imagine you put a large portion of your saving into the financial institution, like a bank, then just wait to the withdrawal to principal and interest next year. You fly off the wall one day when you hear that the bank has invested all your money into the stock market because it's not regulated. Yes, and that's what we talk about today. The financial industry needs to be heavily regulated. Only be strictly regulating the financial industry can be interest of the public safeguarded. The public interest of the society are guarded the thousands of the household and all walks of the life. And the power to the safeguard such interest can be exercised by the institution analyzed by the national law. And there are defects in the market, and the pure free market will be lead naturally multiply and the loss of the social welfare, and as well as the unfair problems caused by the external effects and information industry. And in order to the safeguard the public interest, it is necessary for the state to regulate the financial institutions to correct the animated market defects through the regulation so as to improve the efficiency of the market social resources allocation and reduce the loss of the social welfare. As long as the regulations are appropriate and the overall interest of the public can be improved while the cost of the regulations can be minimized. And only by the strict regulations regulating the financial industry can be industry risk to be reduced. And the financial industry itself is special high risk industry, and which determines the special needs for the country to regulate the industry. Now, according to the Kentucky's book, the banking of the crisis of the 1933, published by the University Press of the Kentucky, a well-known example comes from the outbreak of the economic crisis in 1933. And one of the financial crisis, large amount of the money from the Americans' free commercial banks under the Lux regime and flowed freely into the risky securities market. The flukes of the massive credit found the result a serious bubble in the stock market, as the storm like it in second half of the 1922, the banks to the stock market just collapsed, and the banks suffered the losses of the large scale and enterprises, and encountered the seriously difficulties in the operations. So many banks went to the bankrupt, and the bank credit just verified to be the incurring serious difficulties to their operations. So according to the Kermes and the Ladins paper, financial regulations in the global marketplace, published in the Broken's Wharton paper, financial service in the case of information industry or incomplete information, the party with the information advantage may use the advantage to determine of the party with the information disadvantage. The expecting environment of the financial industry can be established by the state regulation and then continue to provide the fair and environment and the platform. As we pointed out at the beginning, if you put a large portion of your saving into the bank and other financial institution, only to find that your money has been improperly lost and your interests are not efficiently protected. And ensure the financial industry needs to strictly regulation. Okay, thank you.